Good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening of Thursday. And yep, it's the 25th of July, 2024, 6:40 p.m. Central Time. What a day. Whoa. You were everywhere in the stock market. You know, I wake up bright and early. When I say early, 4 o'clock in the morning, 3:30, and I look at the markets and I'm going, whoa. At first, I had a great day in some of the energies. Then I ended up flat. Gave back the money. Is one of those type of days. All right, didn't lose much, so that's the important thing, and didn't make. That's not the important thing. But when you take a look at what the market is doing, you were everywhere in the stock market. Why? Well, first let's get into the first things you're going to get tomorrow. We're going to get tomorrow the all-important PCE price index data along with personal income and spending. This is one of the Fed's favorite tools. For those of you that get my newsletter, trials and or subscribers, I do a whole write-up on it tonight, telling you what the market is looking for and so on. If you didn't get it, go to iraepstein.com. Free offer, sign up there, and I'll give you a couple-week trial to it so you can see what we do. Then you're going to get the University of Michigan, the final, not the prelim, this is the final July consumer sentiment numbers. They're expected unchanged from the prelim at 66. But what moved the market this morning was the GDP when it came out, up 2.8%. That's double what it was in the first quarter of 1.4, and it was 0.7 higher than the market of 2.1, the expectation. And then the beauty was you fell in the chain weighted, the PCE index. If you take a look what you did, you're down here in all these other numbers from the first quarter. So the market really liked how this data shaped up. Then the market hated the next piece of data, which is the durable goods, and they're just crashing. You know, people when they're tight, when they don't want to spend money, they're not buying big ticket items. And 6.6 decline when they expected an increase of 0.3, that is one ugly set. And then you saw your jobless claims and the continuing claims both drop, not do what was expected quite as much. They were looking for an 8,000 decline. They got 10. There's some revisionments that they made. Hurricane Beryl was at this time, so watch out for that. But you can see the continuing had been going up week after week. Now people are finding jobs because that number fell off a bit too. So you look at that. All right. Let's go now to the chart action because it was everywhere. As you can see, you're flat tonight in crude, but you came off lows. You were down in the hole, and this market came back. You're getting bids. Safe haven bids came into the bonds and notes. You were down hard at first in the stock indices. They came back, and we'll go through that. And the Japanese yen continues to get a bid as the market's convinced that come next week when the Bank of Japan meeting takes place, we'll get a big plan on how they're going to cut their Treasury purchases, and it's a flip of a coin. Will they go for an interest rate hike? When we look at the mini S&P for the week, we are down 1.87%. The world has not ended. You know, from a peak to a valley, a normal correction is 10%. And you know, if you go back in time, this has been an unusual time. We haven't had a 10% correction in over 2 years, if I'm correct. That's an awful long time. Normally, it's about every other year. If you go back and you do a study, you'll see that. Could we pull back to 53.49 tomorrow? Easily, if these numbers come in hot. Remember, strong numbers for the PCE are negative. It means the Fed may not make its move in September. As you know, even if the number's hot, the naysayers will go, nah, the next number will be weak. They'll do it anyways. But the market will give you a knee-jerk reaction off what the algorithms do right as those numbers come out. Don't try to compete with the algos. They trade faster than you can touch your keyboard. When you look at the S&P here, this is a pretty good size break. You can't get away from that. The market's in a correction phase. You can see how it's done. It's gone from a top up here of over 5,700 to the 5,450 level. I think that's pretty clear. So we've had a 200-point plus break in the market. Okay, that's important. Where's the market going? Well, it might be headed to the 53.75 level, the 100-day average, and the Bollinger Band you hit. You hit it actually 2 days ago, and now you've latched onto it, which I'd expect. But if I come back with you, look at the swings today. I mean, today was one heck. I just want to come back one day here. This is a broad market. The market really was everywhere that you can imagine, from 55.33 to 54.32. That's a 100-point range, and the day before was even bigger. So it's super volatile right now, and that's the point that I'm trying to make with you. You're riding the Bollinger Band, not Gorilla Glue trade yet, but you're just hanging at it, and you're oversold. Anything can happen off this report. If it's down, first support's here. If the market wants to go into a full-fledged break, well, you might get back over here. So, 575 points, 10% of 57.52. Take off that, and you can see this is getting close to your 10% correction number. That would exceed it if you get all the way down. I'm sorry. In the NASDAQ, you fell into the support today, and you stalled there of the 100-day average, the first challenge of it, all the way back. You got to come back here to May, the last time you were there. If it doesn't like the PCE, you could be going to 18,000. And again, you got to keep your eye. Are you going to get to that correction number of 10%? The market would like to see that. The Dow has fallen to key support at the 18-day average. The other markets are all the way in the toilet. These are falling there. And the stronger market is the Russell. So we know the rotation's been going on. Do I know if it's proper? Here's what will hurt that rotation. If for any reason the Fed were stalled, the Russell that they're buying, a lot of these companies, at least 25% of the Russell, are non-profitable companies. That's not my opinion. Those are facts, and you can go look them up. I've been using, by the way, ChatGPT, typing in some of these things, and it's pretty interesting how close it is to right more times than it's wrong. But it gets things wrong, so be careful. I used it for the first time tonight in my written newsletter to create a chart. And I was impressed how it did it and where it came from. Very, very cool. I do try all these computer things. I'm an older guy, but I know my way around computers. Lower highs? Nah. You had higher lows, and you had an outside day down, then you took out that high, you're coming down. If you take out today's lows tomorrow, you got a problem. When I see this pattern develop and it resolves, before you go back through that high, there's a high probability you get a hard break in the market. On the other hand, you've got what we laid out to be a bear trap. The market was looking down, you took out that high, that means the upper Bollinger Band is in play. You don't have that pattern in the 5-year note, but you lost the bullish reading with the embedded reading. So I've been looking for it to get back to the 18-day average. You did that in the 10-year, not in the 5. And if you looked at the 210 today, it got right into the 10 area. I think 12 was the low that it's done. So this is a spread that was way out. It is narrowed in, and it might go the other way now, where the back end, which has been here, gets over, and that's the traditional way. Think about it. You go out, you want to borrow money. You normally pay, if you get something long-term, you pay a higher interest rate. It's been the other way, and now it's changing. We're getting back to norms. In the dollar index, we've had a bear market rally. I say bear market because you're under the 18-day average of closes. Tomorrow's going to be a game changer, any way that it does. So be ready for it. The PCE numbers should be full of fireworks. The support in the euros right down here at the 100-day average. The neutral zone's right here at the 18. And the first resistance, 109.77, is the 200-day average. But it can do anything off this report tomorrow. The British pound, once you lost the bullish embedded reading, I said, look for the market, I hope, to make a run to the 18-day average. Completely did it. In August, Bitcoin, get rid of your July if you were watching it. Tomorrow's the last trading day. In August, Bitcoin, we were down pretty good today if you take a look at the market. Let's see if I can get you into that Here we go, right through there. You were down $1,055. Ether took a big hit on the chin, and today you're making that up. You're right back. So it's like you went nowhere, down, up, and it's just back and forward. But you're losing the bullish embedded reading, which tells me the market wants to probably make a return to that $63,000 area. In the energies, I didn't expect the market to recover the way it did today. It got under the Bollinger Band and the 200-day average, but it then made an outside day up. Can't be short that market. It lost its reading through here. Crude did the same thing in WTI, identical. I thought the markets were looking so poor they'd keep going. They didn't. My fault. And right here, you held it in the gasoline and the heating oil and came back. So these markets technically have said it's going to be difficult to get under these lows anytime soon. It'll need a crazy piece of news from left field to probably do that. I don't know what that news could be, but that's what I think the market is sort of counting on. And in the nat gas, we know we have hot weather coming over the next 10 days, and yet this market can't hold its head up. We're back to the break lows. So you're not getting any piece of news that is bullish. That's good for our winter time, by the way, folks. You want to see this. So many of us use natural gas. I know my home uses it. And that will help us come this winter if these prices can stay down, because they average the prices that they buy. And even if you spike now, you get an averaging through there. So at least we do in Illinois. I don't know how you do it where you're at. So today was an interesting day, and my pivot points yesterday came in like a charm. I didn't use them today, in all fairness. I was looking at them in the stock market, not the futures. There were no setups there that I was looking at, and they came in helpful. And I was looking at some individual stocks with it for some entries and exits. And you can see this is how it works. Your charts will look like that. Your charting software probably has this. And you don't know how to use it, and most people don't. And I teach you how in a video course. I teach you how to apply slow stochastics with it for timing, and it's free. I want you to see how I teach, because that'll lead you into the other courses that I have. At least that's my goal. IraEpstein.com, free offers, or move your cursor up here for the same thing. I'm Ira. I'm going to be ready for you in the morning, because the PCE is going to be the market mover. I'll see you in the morning review. Take care.